Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, all you traders and investors. Welcome to this Wednesday, February 8th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a good show for you folks today. 3 guests on the docket. We got Frank Holmes up at 8:15. He's the CEO and CIO of U.S. Global Investors. He is an airline and gold expert. At 8:35, we're talking with Rachel Shasha. She's a trader and blogger at Sassy Options. And then at 9 a.m., we have a third guest for you, Eric Leibovich. He is the head of product at AlphaSense. They're a research platforms that is very interesting, doing some pretty cool stuff with AI and linguistics. So we're going to talk to Frank, Rachel, and Eric in that order today. But before we get to any of them, we have earnings coming out of every doorway and wall and window because Gilead, Disney, Buffalo Wild Wings, Twilio, Humana. So let's just kind of try to get to as many as we can today. Joel, how are we doing the S&Ps?
We are trading in the red here by 275. I just want to alert our traders and investors that couple quiet days of ranges, and this is going back if you include the intraday sessions from Friday. We've traded between 22.83 and 22.95, and that is it. Going to go one way or another big today. I'm looking for a move here. We'll see if we take out those lows or finally get into the 2300 handle. Crude getting the beats, more supply than demand. What a shocker here after the OPEC meetings. But crude, that trading range 54 down to the lower 51 handle. We're approaching the lower end of that range. Gold and silver marching. Gold here trying to hit that magical 1250 level. Silver trying to get to 18. So the precious metals are moving up. Good morning, Dennis. How you doing on this Wednesday morning?
Not too bad. Just chilling here, looking on the markets. Kind of flat, but we got some individual movers here. Saw a movie last night.
Which one?
I saw that Hidden Figures movie. Pretty good.
But you didn't want to go see La La Land again?
No, much better than La La Land, I'll tell you, Hidden Figures. And I was challenging my wife's picks because after La La Land, I didn't know what she was taking me. Hidden Figures, I didn't really know what it's about either. So, but then they said something with NASA. I was like, well, it's got to be good if it's with NASA. So anyways, excellent movie. So I liked the Hidden Figures, hated La La Land.
I told you I was the one that gave you the Hidden Figures recommendation.
It's a good one. Was it? Yeah, I didn't remember. I think I've heard it from multiple people here now. So, good movie. Go out and see that one. That was a real good one.
All right. So, we got a lot of earnings. We got an interesting analyst move in Twitter. And you want to start with... Start
with the Twitter. Start with that analyst move here in Twitter. Spencer, we got BTIG upgrading them to buy. And when they were citing the president in this analyst change, I think.
Oh, yeah. Twitter gives the president a second chance. So BTIG upgrades to buy and a $25 price target.
Whoa, and they're on the Donald Trump bandwagon for Twitter here. That's what you've been saying for a while here, Joel. Maybe they were listening to the pre-market prep show because you've been talking about how obviously Trump's tweets, why doesn't it help Twitter? And we've been seeing Twitter come back here. $18 breakout there a couple days ago. Now we get the continued move here above 18.72. The only problem, we got some fundamental information coming out in 2 days. So enjoy it technically here until tomorrow night when the information of the actual earnings come out. And we know Twitter often gets hit on their earnings report. Maybe it's going to beat, maybe it's going to, rally actually on the beat because they've beat multiple times and it's hate, but it seems to always get hit after the earnings report. And I just cite Gilead, and obviously can't compare Twitter to Gilead, but I'm talking about sentiment here, and everybody seems to hate on Gilead after the reports. Gilead reports okay, we'll get to that in a second. It's getting beat here this morning, and that's why even if Twitter reports an okay quarter, I don't know if it rallies.
Dennis, I've never heard you so adamant in being down on a stock. I'm
not down on it today. I said enjoy your next 2 days technically here, but Thursday night after this it is Thursday night, right, Spencer? Twitter?
Yes, it is. It is on Thursday. I'm not sure. Yeah, they usually report after the
They're at
close.
night, yeah.
Nice bump here. Pre-market, we got a print at 19. This was in the after-hours trading, but as far as this morning goes, haven't quite got there. The pre-market high stands at 1889. Be very, very important for this to hold 1860, 1870 off the level, off the open. I could see it drift lower. Let's see if it has the mo to, plow through 19. Still sticking just, fundamentals, technicals, something. A little birdie tells me this stock has to trade up to 20. Fill this big gap here. It's just.
Where are you going? Where do you think it's got to go to?
It's going to fill this gap someday.
Which one? There's multiple gaps. There's multiple gaps.
Well, it's starting to fill one right now from.
You're talking about the big one.
Yeah.
The 21 to 24. I don't know if it ever fills that gap.
Ever? Okay, I'll bet.
He wants to bet on ever. He's gonna take me off because he'll never have to pay that one.
MAUs. I saw Michael Wedbush thought the MAUs were gonna be up. That's what the metrics. They've only had in all their earnings reports. They've only had one inline report. The rest have been beats. I don't know. I mean, they're getting into different sporting events. I mean, I do agree it just doesn't have that common appeal. If you like sports, if you like business,
hated on the street, really, obviously, because there are a lot of people who have been hit on it. Same thing for Gilead. Let's jump over to GILD, and I own this one, and I have egg on my face because this is one I'm now down 12 points in my investment portfolio. Bought it back at 80. I still think there's value here. I am getting paid a dividend to wait, but it looks like I'm going to be waiting a long time here, $68.30. If I was in it for a trade, I think I'd be long gone here by now because now it's making new lows on the move. So if I'm in it for a trade, my time horizon is a swing trade or shorter term. I think I'm out here today. I think it shakes me out today because maybe you're leaning on the 70. And if for an investment, long term, hopefully eventually it comes back here. But Gilead, I think there's value here. That's why I'm not selling in my investment portfolio. My thesis is still the same. The reason I got into this was value biotech.
Spencer, you got the report?
Yes, I do. Q4 EPS, adjusted EPS, $2.70 versus $2.61. So a nice beat on the Q4 EPS. Revenues of $7.32 billion versus $7.15 billion. Looking good there, but the guidance is the issue. They reported fiscal year 17 product sales at 22.5 to 24.5 million. That is what they see going forward. They also project a 22% decline in sales due to falling patient demand. And why do you think that's happening? Because their drugs are working. So
what is
the Adam Fierstein tweet?
Adam Fierstein, a reporter at The Street, tweeted last night, thinking more about Gilead. Perhaps the awful, brutally honest lesson here is that curing disease is great for patients, but sucks for business.
Wow. So here they have a drug that's so effective that you may not even need it anymore, and they get punished for it. So I guess, the whole moral of the story is, not moral of the story, but the bottom line here is, don't make your drugs so effective, I guess. And that's, sad. Sad world we live in when it's capitalism and, they're going to punish the stock because the drugs are too effective.
Yeah, well, they liked the headline number. Yeah, they popped it up to 75. And then Kaplooey here going down to 68.23. That eclipses the former low of the move. Former low of the move at 69.78. So, believe it or not, old support, new resistance. 70 will be your resistance. Going out to the charts here, man, Dennis, I don't want to tell you what the low was. Oh, way back in, we're going back to 2014 levels here. Back in April of 2014, you made a low at 63.50. I don't think we're going to see that today. I don't know. I expect to find some support here, maybe at the pre-market low. But, boy, we're right there. So keep an eye on the low on this one if you're looking to cover a short or take this one in. And, man, this stock just did, ahead of the report, it just couldn't get through 73.
No.
There were some big sellers there. They're being rewarded. I mean, there's the trend. And
it's hated. And the guidance, when you're saying sales are going to fall, it's obviously, it's classic value trap is really what it is, and I'm caught in it. Sometimes you get caught in the value traps. I've been around for 17 years. I'm still going to get caught every once in a while.
Are you going to get out
I'm sticking with it. No,
I'm
sticking with it.
When?
Why am I sticking with it?
No, I mean, are you going to buy more?
No, I'm not buying more because I'm wrong. I'm wrong on this trade. I never add to losers. A
Okay.
lot of people say average down, average down. I don't ever do that in my investment portfolio. But if my thesis changed where I thought, Gilead, okay, this company's in some trouble here or something's going on, I would sell it out of my investment portfolio. But I'm sticking with it. I stuck it. I bought it for value. I'm in a classic value trap here. So I'm down 12 points in it. If I was, like I said, if I was in this for a trade, I'd be long gone. I would have been gone. I wouldn't have let the thing go 12 points against me. But, I have stocks in my investment portfolio like MasterCard that I bought at 15. That's worth 100. So you got to be able to hold a little bit longer. My time frame is long in there. And sometimes, you just can't, sell out because you're down 2 or 3 or 10% in something. And I'm down more than that. I'm down like 15% in it now. I'm definitely not adding to it because I was wrong. And I'm still wrong on this. And, now that sales are starting to decline, it starts to look ugly and it starts to look like a value trap. So I admit when I'm wrong here, I probably should sell out of it in my investment portfolio and just forget about it until they can figure it out. That's what a lot of people would tell you to do. But I've been running an investment portfolio for 17 years. And a lot of the times when I stick with some of these companies I think are still good companies and I think they can figure it out, sometimes, a lot of times they actually do come around and turn around. And they've got to figure it out. They got a lot of thinking to do here, but I believe in the company still, and that's why I'm sticking with it.
Did you
And
get?
and Joel is silenced by those comments.
I am. I'm silent.
Moving over to the House of Mouse, let's go to Disney here, a stock that is actually loved by the street because Disney they can't seem to do any wrong here because this quarter did not look great to me. Spencer, give us the details here because we're looking at Disney flat here this morning. It's all about sentiment. I'll tell you. Okay, so yesterday I gave you the algorithm that guidance is greater than current earnings report. I'm going to say sentiment is greater than guidance, which is greater than earnings report. Because if you are loved by the street, they will find a reason to buy you on an earnings report. At least in this market, seems like that way, anyways. Give me the Disney numbers.
So Q1 EPS of $1.55 versus $1.50, revenue 14.78 billion versus 15.26. What's interesting is that they missed the estimates on pretty much all of their segments. Looking at consumer products, studio and entertainment, parks and resorts, media, they all missed the estimates, but they're not necessarily bad quarter over quarter or year over year. They're looking pretty good. So this is your reason, Dennis. That they're looking for a reason to buy it. Looking not terrible quarter over quarter. They just missed Wall Street's estimates for all the segments. But that's the reason that I think they're buying it.
It's just loved again. Whether it's Star Wars, what it is, but this company was hated back at the end of last year, and it's loved again. And if you can identify when the sentiment turns towards the stock, when people start to like it again, if you can identify those turns in sentiment, you can make a lot of money. And obviously Disney, hated towards the end of last year. Trump comes in, $90 to 110, big run here. This report does not look great to me. It didn't look great to me, but they'll find a reason to buy it. Stock was trading down after hours. I believe we got down to the 105 handle. That was a buying opportunity because we're already back up here at 109. And you know what? I would not be surprised if this stock continued the climb here today. And it wouldn't even surprise me, not that I'm going to make you a bet on this, Joel, but it wouldn't surprise me if we even got up to challenge the high of the move, which was 111.99.
Oh, and also Bob Iger said he might stay later than in 2018.
That helped. I saw that on CNBC. Maybe
that helps.
That helped a bit too. But they find reasons. I mean, if the company is loved by the street as the current time, they will find a reason to buy it. If it is hated by the street, they will find a reason to sell it. Even if the earnings, sometimes it's flat out miss guides. They're going to sell it no matter what. But when you get these wishy-washy reports where you're beating on earnings, but you're missing on revenue, well, then it falls back to sentiment. Is the company liked right now, or is it not liked? Right now, I would say that Disney is a liked company on the street.
All right, pre-market low, 105.5. Dennis, you were probably holding out for that 105.21 low.
I was trying to buy the pullback in Disney, and I wish I would have, but I was like, sit back, and I couldn't pull the trigger.
Yeah, 105.21. You hit that. That was your low. 105.21 was your low for the year, January 3rd, and then you hit 105.50 in the pre-market. This is a tough one. I mean, we bumped up to 109.50. Remember, we had all those sellers at 110. I know you say it's love to stuff, but I'm seeing here, and maybe a little stretch in the imagination, not much of a left shoulder here, but a little bit more of a right shoulder. So I'm calling a little
A
head
foreboding technical
Yeah,
bearish pattern of a sloppy head and shoulders.
Sloppy head and shoulders. I'm still going to keep an eye on 110. I'm not going to try and stick my nose out of 109, but still 110, that
Big
area.
number.
Yeah, and it was the institutions. We'll see. But, man, a big, big rally back, but it seemed to have stalled. So we'll see what happens when the paper comes in. But it is 8:15, and we're going to bring on our first guest of the day. An expert on two things, Golden Airlines. Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. We'll be right back with Frank.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we have Frank Holmes on the line, CEO and Chief Investment Officer of U.S. Global Investors. Frank, how you doing on this Wednesday morning?
I'm excellent, thank you.
Excellent.
And yourself?
We're doing good here. We just want to talk to you about your two areas of expertise. Maybe you have a few more too you can tell us about. But airlines, the Jets ETF has been soaring here. I believe I don't know if that's an all-time high or not, but earnings kind of mixed for a few of the different companies here. But give us the overall health of the airline sector.
Well, it's actually much better than what a lot of the headlines were, especially in halfway through 2016, when Warren Buffett in the summer was buying out his big core position now, which is a game changer in the industry. There was just nothing but negative headlines from analysts. And interesting enough, now we're seeing growth of 6%, 7%. I think India, when we look at the global space, was up 23%. China was up 11%. So it's pretty robust, the overall global growth in revenue for this industry.
All right, let's go into some individual issues. Dennis, did you have one you wanted them to?
Yeah, I wanted just to get your thoughts here. Alaska Air just reported earnings here this morning. Spencer, did you have that earnings report here just because we haven't got to it yet? Maybe you could just give it to our listeners there.
I do have it.
Get thoughts on it.
I do have a Q4 EPS real quick of $1.56 versus $1.40, so it beat their revenue $1.52 billion versus $1.44, so they beat there as well.
And Alaska Air is trading up 3 weeks here in the pre-market. Frank, what are your thoughts here?
Well, if you take a look at the revenue for Alaska and take it over the past 4 quarters, it's in a positive trend. It has that top-line growth that's just very strong, and the merger with Virgin, it only strengthens their position for domestic flights. So I think it's one of my holdings I've owned for a long time.
It's been a good one for a long time if you've had it, because this stock has been straight up. I mean, I look back here at 2012, 2013, this was a $20 stock and a $94 stock, and now $97 here in the pre-market. So incredible run here for Alaska Air. What are the other airlines that you like?
Well, I think Southwest continues to chug along and be the big workhorse of America, and I see that Delta is one of my favorites. American. They're all really showing little headwinds every so often coming out of Europe. That slowdown, but it's interesting, the slowdown in Europe last summer after Brexit, immediately Delta changed its flight schedules of flights going across the Atlantic pond and focus more on the growth of Asia. So they're dynamically adapting to global issues.
What about the rise in oil here? Just significant rise really over last year. Seems to really be stalling out in the $50 handle. Now I know Delta got into some hedging at some point. I don't know how well it turned out. Any worry about the price of oil, which is one of the biggest expense for airlines?
It is, and it's probably the biggest, most sensitive is American Airlines because they don't hedge at all. But on the other side, the CEO takes his compensation with shares. And so it's a very sort of unique company. And same as Allegiant is a similar structure, whereas other airlines will hedge 1/12 of half their cost structure. And that's how they manage through this. I think the average price, it hasn't really changed. We look over the past couple of years, what is the average price for the oil? It's really not significant. It's been volatile, but the range basically is topped at 60 and bottoms at 40. And I think the companies make a lot of money in that range. And it's helpful to have oil above $50 a barrel for Texas, Houston, which is a big business area. And it doesn't slow down the economy, but it helps that economy. That's sort of the sweet spot.
Frank, let's jump over to gold here. And we've seen a nice little recent run here in gold, at least for 2017. And I was saying on the show just a couple days ago that this is kind of mirroring what happened in 2016. At the beginning of 2016, we had a nice little run up in gold as well. And then by the summer, the luster faded and gold started getting sold off towards the end of the year. But here we are. We're looking at gold rally here in 2017 pretty well. Gold miners are obviously following suit. A lot of the gold miners are up as much as 10, 20%. Some of them are up as much as 30% over the course of the last month. So it's been a nice run here for gold and the gold miners. What do you see for the coming up in the next couple of months for gold?
Well, first of all, it's a good observation, and you really truly get it. I wrote a picture, showed a visual showing the similarities of last year after the rate hike and how gold has behaved. I think going into the last quarter, a lot of people worry about rates rising. And what would be the ramifications after the rates had risen? All of a sudden, gold takes off. So it's interesting contrarian thinking. But let's talk about the big picture that's most important for investors. It's called the fear trade when we look at gold in this part of the world. In the other part of the world, it's called the love trade when we go to Asia. But here it's the fear trade, and it's negative real interest rates. And what are they? Whatever the government's going to pay you minus the CPI number. So it gets reset every month. And CPI lifted itself in the month of January. They're looking for December numbers. And so we went to negative interest rates. So we look at a 2-year or 5-year government bond in the U.S. It was paying a positive, then it went negative. Last year when gold soared $24, that's when it went the most negative real interest rates. And then it started to go positive in the fourth quarter, and now it's negative again. That's always good for gold. So it's a play on the dollar, it's a play on the CPI number, and gold is the fourth most liquid asset class in the world, and it is the ultimate of money, so it has a relationship to the cost of money.
All right, so you've had a nice rally here, and now I'm looking at the daily chart here.
And it's not over.
Not over?
It's not over. It's not over. No, it's not over. We're going to it's really I don't believe it's over. And if you look at some of these gold mining companies, they got their costs down from $1,700 an ounce all into $900. So this ratcheting up is throwing off buckets of free cash flow. That's what made Newmont soar last year. It's this free cash flow that they didn't have for 4 years. So I think it's a very different cycle. If you look at the best performing gold stocks, the South Africans and Australians, well, their currency's fallen relative to the U.S. dollar, but the price of gold is up. So actually they have margin expansion. They have margin expansion means more free cash flow. Those stocks get re-rated automatically.
Frank, just a quick question here, and a lot of the miners, when you look at them, you got to look at their cost of production here. And at the end of 2015, when gold was really in trouble, and you saw stocks like Barrick Gold getting down to $6, a lot of people were citing that, hey, the cost of production is over $1,000 an ounce, and if gold starts falling under 1,000, a lot of these companies could be in a world of hurt. Obviously, gold bounced; it was okay. Have they started to bring down those costs of production there, the individual miners here, or I'm just curious, how that's looking relative to where gold pricing is now.
When gold hit 1900 in September 2011, we had minus interest rates of 3%, minus 3%. That's why gold went to 1900. And between that period and 2015, 17 CEOs in the gold mining industry lost their jobs. And there was a force to get those costs under control. And the industry as a whole got them down to $950. So now they have margin profit.
Right.
Barrick got rid of assets to get rid of debt. And they repositioned their company, and they're focused on high-margin business, and the stock starts to soar with that.
And are you as bullish silver as you are gold?
Okay, silver is the warrant on gold. And the math is this. Gold goes up 1%, silver goes 2 to 3%. Gold goes down 1%, silver falls 2 to 3%. So if you're bullish on gold, silver is no doubt going to torque up your portfolio. But there's strong consumption in America of silver coins. There's a very strong consumption.
Really, I have some. Maybe it's time to get rid of them. Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. He's written a book, too. You might want to check that out. Frank, great information as always. We'll have you on again soon.
All right, take care. Happy investing.
Thanks, Frank.
All right, S&Ps on the lows of the session here. Dennis, I want to get your reading here on the S&Ps. We've had, like I said, basically 3 days. If you take the intraday range from Friday, the intraday low was 83, not reflected here in the chart because we took a nice move off the unemployment number. But basically, 3 lows here in this area. Major resistance up top at 22.95 here. What do you think here, Dennis? You think maybe come back down here and trade at this all these congestion here at the 22.60 area?
I mean, you're just sitting here waiting for the next big move, and am I going to fight this bullish thesis going on right now? No, I think it's consolidation, digesting, and probably ready to move higher. So I'm still banking, on the bull side of the market here. It's been a hard trade to be short this market. I know we can see the banks, and some of the European banks have actually really started to look weak here, and they're starting to look a bit broken, looking at Deutsche Bank down 2% in the pre-market. I always try to get my talent, and the leading sector has been the financials. That's been, what has run us up here over the course of the last couple of months. So you think if you lose the financials, you could be in trouble. It wasn't a great day for the financials yesterday, but I'm not betting against them yet here either. So this market seems so resilient. Even if we lose the financials, it always seems like there's another sector that picks up the slack. So
can I throw something out there? Can I throw something out there?
Throw it out there.
23.05 versus 22.65.
You got to go on, because here I don't even have S&P. You know me. I don't have S&P futures quotes because as a prop, they want to charge me $500 or $600 a month for that. So I don't want to pay it. So I use the SPY now. So, and the other prop traders are doing the same thing. Why am I going to pay $500, $600, $700 a month for E-mini quotes when I can use my SPY? I know it doesn't trade. The one downside, obviously, is it doesn't trade after 8 o'clock. But, I can look overnight on the CNBC app for free and see where the S&P futures are. But, that's the downside. When you have, these ridiculous costs for data, you have professionals. I've subscribed to the S&P futures data for 15 years. I'm just having a rant on. I just want to yell at the data cost.
239
before I do the bet. I'm yelling at the data cost first. So if you're retail or if you're not a licensed prop, you don't have to pay those kind of ridiculous fees. But they want to charge me $600 a month. I don't pay them. So I don't even talk S&P futures I talk the SPY now. So let's give me the SPY equivalents of your bet.
239 versus 219.
Wow, that's a long ways. That's going to be a long bet the way we're trading. I'll do it.
Okay.
I'll do it. Lunch bet. Lunch
or steak dinner?
Oh, you already owe me 2 steak dinners and you owe me 2 lunches. You're so far in debt, you're going to eventually be like the U.S. government here, never being able to dig yourself out of the hole. And you just have to keep betting your way out of this hole. Dig the hole deeper
Well, you
there, Joel.
decide.
So
You decide.
I'm doing a lunch.
Okay.
239 versus 219. And look, you're even taking. Wait a second here.
It's
That math out. It's at 228.69 right now. You're trying to take me for 30-cent edge here.
Okay, whatever. What is it? Is it 228.69 right now?
Yeah, so it's 238.69 or 218.69.
Okay.
Right, I'm writing that down.
All right, so am I.
Spencer, write this down. We need to log these bets.
Okay,
Joel,
okay. Repeat it again so I didn't write it down the first.
I got it.
238.69 versus 218.69. He was already trying to take me for 31 cents in this bet. You don't watch it, Joel. He's sneaky like
31 cents. All right, what do you got going on here?
We got a bet. We got a bet, folks. Okay, let's go. Let's go to balance land. Let's see what's happening here. 8:30, and then we'll come back to the earnings parade. Hot off the press. Not a lot. Alibaba, 55,000 to buy. That's a buy and balance there. It's a little bit significant. House of Mouse, Disney, 50,000 to sell. It's the first look we've seen of any institutions. Now that is so small compared to the volume here. Disney's already traded 100,000 shares this morning. Traded a ton last night, so 50,000 shares is not much. But as of right now, Disney has a 50,000 share sell and balance. DuPont's had a trend here. Double D. I've seen it have a trend here, and it's 30,000 to sell here again. That's a 3-day trend, and when they start going for 3 days, I start to watch them because sometimes those trends and imbalances, opening imbalances, can be pesky. And Double D has another sell imbalance here today. If you're trading Double D, you probably want to look at DOW as well, Dow Chemical, because they got the merger together. Dow Chemical has a buy imbalance of 17,000 shares, so I'd like that to hold, and there'd be a little risk arbitrage opportunity there at the open, but I doubt it's going to hold.
All right, 831. S&P sitting on the lows, just off the low of by a buck. 22.84 and a quarter is your pre-market low. As I mentioned, couple lows at 22.83 that we really got to keep a close eye on. Had some nice intraday movement yesterday. I don't know if you caught it at all, but AMD made a new high for the move at 14.27 and then gave a lot of it back. Got down to 13 and a bounce. Nice move in that. Does that red candle there make you a little bearish at all?
Yeah, it makes me. Yes, it does. And it's been an incredible run up here at AMD from the 9 handle just 2 weeks ago up to 14. It got overdone, and now you see the big red ugly candle on there, and I think your technicians look at that too. If this thing gets anywhere up near $14 again, I think it finds sellers here now. So now I'm a seller of pops in AMD. Takes out the old high, though. That's what I would lean on, 14.27. Then all bets are off. But $14 is where I'd like it to get back up there, and I might even try from the short side. And then if you're trading AMD, you got to be trading NVIDIA because those two, like I said, seem to trade with each other. NVIDIA has not had nearly the move that AMD has. AMD has really popped up. But NVIDIA has run up here as well, and they do kind of go together. So if you're trading AMD, you're getting a little bit bearish on that. I think you got to be watching NVIDIA as well.
And also we were mentioning on the pre-market show the quiet March here in Apple. Look at that. 1, 2, 3, 4, 5, 6, 7 up days in a row. Climbed into the 132 handle yesterday's session. 132.09, only trading in the red by a nickel. You got to look at maybe the sets the sights on all-time highs here of 134.54. But just a slow, steady march here in shares of Apple. And I just wanted to mention Facebook has been bouncing around since their report here. Made a new all-time high, 135.49. This is a longer-term chart here. But what do you make of this Facebook chart?
Well, there was some commentary from some analysts today, wasn't there, Spencer, on Facebook?
Yeah, we had Bank America adding Facebook to their, I guess their version of their conviction buy list, or what it was. It was the U.S. one list is what they added it to.
That's their conviction buy list, is the U.S. one list.
Yeah.
Everybody's got these different lists and stuff. Hard to keep track of them all.
And there's a few reasons. One of them being Snapchat not being the threat that people originally thought. That was the main one, actually.
Stock trading up 37 cents in the pre-market's getting a little bit of lift on that, obviously moving up when the market's down, so you can thank Bank of America for that here. It's hard to fight Facebook. I mean, just as much as we were saying, Twitter hasn't been loved by the street, Facebook is. And it seems like, you look at Facebook here it is 132, made a new high. Was that a new all-time high 2 days ago?
Yep.
Just
4 days
yeah,
ago. Yep.
or 4 days ago. So you start looking at it here and you think, it's just loved by the streets, so it's hard to fight this one. I think every time it pulls back, people just dive in again there. So Facebook here, I'm not fighting the trend on it. I'm not going to get bearish on it.
I will only if it takes out the 130 level. Before the report, you had a couple lows at 129.62. And then after that, you had 4 consecutive lows at in the 130, 40 to 50 area. So psychological, big run up, bouncing between 130 and 135. You had the new all-time high. I think if you get a weak market and you lose 135, then I'd take the downward momentum. Besides,
I like that through 130.
Yeah.
If it takes out 130, I could see a trade from the short side. Not long term, but like a little swing trade. Takes out the 130. I'm on board with you on that one, Joel.
All right, no bet then. All right, it's time to take our second break of the day. We got a good guest coming on. We haven't spoken to her in a while. Rachel Shasha, she's a trader and blogger at Sassy Options. Talking options with Rachel. We'll be right back. Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. We're on the line here with Rachel Shasha. She's a trader and blogger at Sassy Options. Rachel, I'd first like to congratulate you on your recent marriage. How's married life treating you?
Oh, thank you. It's similar to non-married life, I would say.
Okay.
I feel like it doesn't change much.
Until kids get involved. Then it gets busy.
All right. So
thank you for my congratulations.
No problem. So first, let's just go to the overall health and trend of the market. I guess it's kind of hard to say we're in anything but a major uptrend here, but checking on the health of the market, what internals are you looking at, and what kind of grade are you giving it?
So, okay, yes. Overall, long-term trend is higher. I think even intermediate trend is higher. So short term, we're not doing anything. Obviously, we're just vacillating back and forth. But I guess I would say I do think that sometime in the next month we start to do a real pullback, like a pullback correction. But I'm going to say this. I think we make a new high first. So if we start just falling out of bed, I think it's a buy, and continually just a buy until we at least make a new high in some kind of event. Because think about it. First of all, there's so many stops above 2,300 that have not been touched yet. So those got to go. So even though, like, when I look at, like stocks above their 20-day moving average or 50-day moving average, they're definitely ticking lower, which is not a good sign. Rotation is basically holding this market up right now. But at the same time, I don't think it's going to just fall out of bed until we reach a new high. So I would say just keep buying the dip. And if we do fall below 2150 before making a new high, I would say we will probably be back at 2,300 very quickly.
Are you talking about the cash? You talking about the futures here? What?
Cash. Yeah, cash.
All right, because
yeah.
You made an interesting point there. You said, all the stops above 2,300, right? You're talking about buy stops and things like that, the people that are short. And sometimes I think of the market, too, as like the book. Like when I used to hold the deck on the floor in the S&P 500 futures, the deck would build up, like one side. And then that side, the market would move away from the deck, but eventually it would come and clear out all that paper, right? And then start a new move, right? Well, to me,
Exactly.
I think on the upside, I do think that there's some buy stops, and I think that there's some institutional orders, some big sell orders we've seen in some stocks. But I think the deck is really building the longs, underneath now. I think people are maybe looking to, lock in profits. Oh, I've missed out. I'm not going to buy Apple at 132. I'm going to wait till it gets to 128. I'm going to buy it on a pullback. So to me, I mean, you're right. That 2,300 is a big bogey, and we could be taking it out. But to me, I think there's a lot of paper building up, on the downside. But
You could have said that for the last 7 years, though, Joel.
Right. And I do agree.
Rachel, I got your back here. This is,
I agree. Short term, it's getting a little bit like, people are getting a little bit complacent and just buy every dip. But I just have the sneaking suspicion it's not over. And even if we keep getting these little traps, look at all of last week. Basically, all of last week looked like a bear flag. We just gapped down and everyone was like island reversal. And we just kept staying low. We couldn't fill that gap. And then boom, Friday, it just like goes through the roof. So I just think people get too overly short really quickly. And then
everybody wants to call the top.
Correct that.
Everybody wants to call the top. They've been trying to call it for 7 years, and it hasn't worked because we keep coming. We've had a couple little 10% corrections in there, but really, this has been one of the strongest bull markets that I've seen, in my trading career, 17 years. I mean, we're basically up for 7 years straight here, and it's a hard trend to fight. So I'm on board with you, Rachel. But let's jump into some of your individual trading here, because you look at open interest, and I love that. That you look at that. Tell how you look at open interest, and use that in your trading.
So I do this for SPY, and I also do it for individual stocks. But starting with SPY, and I post this every week, mostly every weekend. I post the open interest for SPY for Wednesday, because now there's like a Wednesday expiration, and for Friday. And I've also actually been tracking them. I've been tracking Wednesdays since they first came out, and I've been tracking Fridays just a little bit after that. So for Wednesday pins, we're at 1721. So basically, out of 21 weeks that the Wednesday expirations have been out, 17 have pinned. So I feel like there's something to it. And what I look at is like where the high strike puts are, where the high strike calls are, and I think of them as like barriers. And then oftentimes they will kind of land right in the middle. So for today, since today is Wednesday expiration, the best pin is basically around 229.5. So I would say anywhere between 229 and 230 is likely where SPY will close today if it pins again. And like I said, I only have the stats from when they started, which is 17 out of 21. So if we're going to make 18 out of 22, then it's going to end there. So again, I would say this little dip we're getting right now might be meaningless, but I also don't think we're going to fly up today. I do this with other stocks too. So if I see like, just the high momentum ones like Apple, Baidu, Netflix, actually Netflix does not pin well. Another example would be Google. The same thing, you find the high calls and high puts, and it usually ends up in the middle somewhere, unless that stock has like extreme momentum that week. But that's also a great clue. So if you start seeing a stock like fly over its high calls and stay over them, then that stock is probably a buy.
What are you seeing in Apple?
Apple actually is very strong. I would say buy every dip right now.
All right.
And it actually it got over its high calls this week and started shifting the open interest, which is, again, it's a sign, especially with Apple, it's a sign of immense strength.
All right, we haven't had John in a while since Goldman Sachs has took off here, and it's just amazing run. Now the election factors and everything that went into it. What did you see anything? Before the setup there, when we just took off after the election, did you see any positioning in the options market? Ahead of that historic run.
See, I don't. That's the thing, is I don't look at positioning in terms of like, a bunch of funds bought GS before. I look at it differently. So I look at it. What I saw, and so it wasn't like right before the election, it was after the election, is what I saw is, GS is one of the greatest pinners. It usually pins within the high calls and high puts. And for like 3 straight weeks maybe, it did not. It flew over the high calls. And like I said with Apple, and like I said, if you see that, that just is speaking to the strength of that stock. So like when I see that, it's like I said, it's pretty much a buy, because it's saying, there's so much demand. These market makers aren't even like trying to keep it below the high calls, or can't.
All right, and just anything. I know we've asked you for comments on the oil market in the past. Anything that you're gleaming from the trading range in crude oil futures?
I don't really look at them, to be honest, so I don't know. But I took a peek at the open interest for gold, just because it's been up so much recently, and I would say there's a decent chance it stays steady to pulls back next week. So I wouldn't necessarily like fight it, but it looks like it might be done like ripping higher, or will pull back just because of all the calls that are in the open interest.
Rachel,
I would also say too, the open interest for next week, which is the monthly, so it tends to be more important. There's a lot of high puts at 5,225. So anyone like trying to short this market right now for next week, it's probably not going to work.
Rachel, question. Do you use open interest when you're looking at a company that's maybe going to have an earnings report as well? Because we know sometimes they can really build the calls and the puts as people are making their bets ahead of the earnings reports. Like we got a big one with Twitter coming tomorrow night. Do you look at those, and do you potentially make trades ahead of the report just based on open interest?
No, not at all.
Too
in
risky.
fact, I don't even look until after the earnings. And then if the stock price is opening near a place of a lot of resistance, then I will think, okay, it's probably not going to go over that until maybe next week. But if it's like clearing tons of calls or clearing tons of puts to the downside, then I don't even bother with it, because it's not going to work.
We've been on the line with Rachel Shasha. She's a trader and blogger at Sassy Options. Rachel, always great having you on. We hope to get you on sooner than last time.
Okay, me too. Thanks for having me.
Okay.
Thanks, Rachel.
S&P, man, you're bullish. Rachel's bullish. Everyone's so bullish.
It's just two people.
Spencer's bullish.
Joel is.
He has his Dow 25.
You know what? You could be right. Maybe it's going to be the time. You've been trying to call us pullback for a long time, Joel. You're going to get it eventually. I'm going to tell you. You're going to get it.
It's just all technicals. I'm not doing this. This is not on opinion. This is not opinion, Dennis. This is
not opinion. This is
this is a pure technical setup here, Dennis. A triple bottom.
Why? Okay, so yeah, we take out the triple bottom, but how far are we going to pull back? That's the question too. So let's say we take out this little triple bottom from the last 3 days. Where are you looking in downside? And I know you were just making a bet with me 218.64, but a lot of times we take a little triple bottom, we pull back a day or two, and then we're right back up above it again.
I think I don't see much between 22.83 and really 22.62.
So you think we could have 20 points downside in there.
Yep.
And, I don't know. We can have 1%, 2%, 3% pullbacks. Those happen in this market. They don't happen that frequently, but they do happen. But it seems like there's just this underneath demand in the market, almost, depending on the sector, obviously. But overall, S&P futures, there seems to be this underneath demand that doesn't go away. And every time we pull back 2%, 3%, 4%, the investment managers pop back in because they've been underinvested ever since the financial crisis, when they all got, a lot of people got shaken out back then, obviously in 2008, 2009, when it got really, really ugly. And, everybody's been chasing this market ever since. And you have a lot of other individual traders and individual investors doing the same thing, that they've been chasing this market up, and the market has been resilient. I mean, we've had a lot of reasons to sell. If you just look at this back and sit and look at the macro picture, there's a lot of unknowns here. First, we've got a president that we don't know what he's going to do next, and, whether that's a good thing or a bad thing, it's up to you to determine, but it's uncertainty. Market typically doesn't like uncertainty, yet they continue to shrug this off. We do, all of a sudden, out of the blue, we have a Muslim ban. Market kind of shrugs it off. We sold off for a day or two, and then we're right back up. He's going to tear up Dodd-Frank. Yeah, that sounds, fantastic for the banks here, but is it really? This is what caused the financial crisis in the first place. So, was it, just under-regulated banks? So, Wild West of banking, is that really good for the overall market in the long term? I don't think so. but short term they seem to like him. That's why the banks are rallied 25 to 30%. But I think he'll have a hell of a time trying to tear that up. I don't think it's going to be that easy. He had trouble just getting this Muslim ban reinstated here. He'll have a real hard time tearing up Dodd-Frank. So those are arguments for your thesis here, because we've rallied 30% on the banks thinking there's going to be less regulation. So I'm arguing your point for you, but the whole thing is the market just doesn't seem to care. So all this uncertainty, different issues, we had oil collapse, last year. There's always a reason to worry. Yet this market, there always seems to be a sector that picks up the slack, and it's such a hard tape to fight.
Okay.
Jimmy in the chat says, there will never be another bear market again. You know what, Jimmy? I'm starting to wonder that myself. I love bear markets. I wish we'd get a bear market. I hope Joel wins this bet, because I make a lot more money trading down markets than I do up markets. Up markets are not fun to trade. There's no fear out there. There's no, inefficiencies, stuff that, I like. My best years were back in the financial crisis when the market was collapsing for trading. But, because you get more volatility. There's a direct correlation between my P&L and the VIX. And when the VIX is sitting down here at 11 or 12, it's a tough go. It's a tough go as a professional trader. There's not as much action. But, when you start getting the VIX up to 25, 30, 40, that's where, you really get the action. So I hope you win this bet, Joel.
Okay, we did have another earnings report. AKAM is out here, and up to 73, 75, down to 66, hanging out at 68. How's the report look, Spencer?
Q4 adjusted EPS 72 cents versus 68 cents. Sales of 616 million versus 604.8. So a beat on the top and a beat on the bottom.
Stock trading down. So here's an earnings reversal where you get the pop and then the drop. And you know what? There is a play here, and I learned this one from you, Joel. Just looking, when a stock, you can use it as the open, you can use it as so many different things. But when you have a close, and then you have a pop off the earnings, and then it comes back through where it closed, that's often a sign that, hey, especially when it's short-lived, that this is, could be an earnings reversal play here. Akamai, classic one. Gilead was last night too. Gilead got the initial pop and then the drop. Disney has been trying to fight, but it's really struggling at the 109. So we'll have to see what happens with that going the opposite way. But AKAM is an earnings reversal play here. And now you look at it and you think, wow, overhead supply here above 70.
Yeah, and just hanging out at 68, pre-market low, 66 even on the nose. In order to get back into the range from yesterday, you got to get up to 69.58. The close is way up there at 71.12. Dennis, you were referring to when it had the pop up to 74. Then if you were quick enough to get it coming back down through the close, you could have got a nice trade. But I don't know. Some people might be trapped yesterday looking to sell this on a pop.
Couple other ones here. Allergan reported this morning, HEN. I'm liking this. It's up another 5 points. I'm still long it. I haven't decided. This was more of it was an investment for me, but it was also an investment with a shorter time horizon. When I bought it here, it's like it's hated right now, and I saw a little value down at there, 190. Now I'm looking, I'm up 50 points here in the course of a month and a half. That's over 30% here. I'm itching to take this gain, Joel. Give me a reason to take this Allergan gain.
No, I'm the one that told you to stay in earlier.
I know, you're keeping me up. I'm listening to you on this one.
What
do you want me to do? Tell me what to do. Chat, give me your opinion too. AGN. I'm torn because I want to sell.
Well, first thing you would do would pick a point where you wouldn't want it anymore. Like if you're not, if you just want to try and keep yourself safe. And to me, that would be just under the 225 level. You had a couple lows at right at 227. Give yourself a little room there. On the upside here, I don't know. I think this thing is just calling for these highs just over 240. You had a, let's see here. You had a double top. This would be the area to test. 243.60 was your high on October 11th, and then another high at 244.66. So maybe there, 243, 243 and a half if you sell it on strength. If you just want to let your profits run, I think you got to give it a little bit of room.
Jumping over here.
Want the number?
You got the number, Spencer?
Yeah, I got the number. I got a lot of numbers.
Yeah.
Q4.
Yeah, give it to me.
All right, Allergan Q4 EPS, they beat. Q4 revenue, they beat. Q1 revenue guidance, they missed. Fiscal year 17 revenue guidance, they beat. And fiscal year EPS guidance, they missed. Or I'm sorry, that was in line. So they beat on both Q4. They were mixed on the Q1 revenue guidance and the fiscal year revenue guidance, but they beat on the fiscal year.
What are they guiding?
Guidance.
How much are they guiding? I like the numbers.
For Q1 or for the whole year?
Give me the whole year.
Okay, so fiscal year revenue, $15.5 to $15.8 billion. 15.37 was the estimate. So they beat on the fiscal year revenue, and fiscal year EPS is $15.80 to $16.30.
Holy, they make money, too.
1601 was the estimate.
Man, these companies make money. These biotechs, this is one of the times, when you look at the biotech sector, and it's so depressed because we don't know what Trump's going to do with drug pricing. There's unknowns there. But man, these companies make money. You're looking at this one making 15 or 16 bucks. You look at a lot of other ones. I've talked Gilead before, but the Celgene and stuff. These things trade, a lot less multiples than the overall market. And I still think aging population. I still think we're going to need drugs here in the future. Going back to that was one of the first books that I read when I started trading was that Boom, Bust, and Echo. Did you ever read that book, Joel?
No, who wrote
it? It was David. Was it David Foote Spencer? I'm trying to remember who the author was. It was Boom, Bust, and Echo. And it's talking, about the aging demographics of the population and how pharmaceutical companies, are going to, be obviously, a great environment here as, we've got an aging population. So the boom, bust, and echo is just referring to demographics.
It's David
and
Foote.
the boom, you're talking about the baby boomers. The bust was actually my generation because there wasn't as many people aged in my generation, and then the echo generation is the children coming back from the baby boomers. So there's the echo is another boom. So basically you have the bust in the middle, which I guess is my generation because there wasn't as many people. But basically there was a lot of arguments just from longer term. You're talking very long term investment theses here. Or theses, I guess you would say. And, the thesis was, with pharmaceutical companies and an aging population, with with the baby boomers all aging, they need more drugs. And you can look at healthcare, you can look at all these things that are going to be needed. And it's worked. I mean, long term, it has worked. But we are in a down cycle over the last 4 or 5 years, at least in the pharmaceutical area, at least in the biotechs, I wouldn't say 4 or 5 years, I guess the last 2 years. And you start thinking, man, is this, the opportunity to really position yourself for the next big wave of, pharmaceutical companies going up? Because drugs aren't going away. We're going to need drugs. Aging population. I think in the next 10 years, pharmaceutical companies are still going to be an outperformer. And they're a massive underperformer right now. So that's why my portfolio is very heavy pharma, because I have a 10 or 20 or 30-year time horizon. And I think, drugs are good long term. Short term, they're not liked right now, though, because of all the uncertainty.
And on this one, on Allergan, Pfizer wanted to pay $340 for this thing.
They did.
Yeah, so...
they do their homework.
Right, and that deal ended up... not going through, but we'll take a look at it. Nice run up here. Let's see if we can test those highs right here in the 240 handle. 2 pair of highs at 243 and change.
Let's do Twilio.
We did.
Yeah, TWLO.
Yeah,
What's it doing?
Twilio.
Talk to us, Spencer.
Q4 adjusted EPS was a break-even versus a $5 loss estimate, and the revenue was $82 million versus $74.2 million. So they beat on both.
This stock's been coming back. We talked about it yesterday on the show, or 2 days ago on the show, and started breaking out through 30. A little bit of an ugly candle yesterday. Maybe people nervous into the report here. I'm mixed here. Here's a stock. It's an okay report. Stock's trading up 4% in the pre-market, but they're not coming by in a hand over fist either. So I don't know. I don't know if I can get on the Twilio bandwagon. What are you saying, Joel? I'm mixed. Sitting on hands. SOH trades.
This thing's been a wild child. IPO'd right at the $35, $40 area. Quickly went to 70.96 and then came back, made a new all-time low on the first day of the trading year at 25.98. It's been a steady march up. A couple interesting areas. I think I'd like to get this puppy out of the 32 handle. A pair of highs at 32.31 and 32.42 from the last 2 sessions. The pre-market high just above that. I think if you could get in there and then I like to get it over 33. 33.05 was your high on December 27th. So it's got some work. Stay in the 32 handle as it takes 31.90. Take a look at that double top, folks, if that's your trading pattern you like to take a look at. All right, 8:58, Spencer, you want to wrap up today?
We got another guest.
We got another guest, Joel.
Well, you want to wrap up the portion of the show that Dennis is on.
All right.
There you go.
All right. Well,
good recovery, Joel.
Yeah, nice recovery. So on tomorrow's show, we've got Michael Lamoth and Brad Thomas. We had actually before the election, he wrote a book about Donald Trump's successes and failures in real estate, and he measured his business acumen. And then Michael Lamoth is the founder of ChartYourTrade.com. So we're having Michael and Brad on tomorrow, and then. And yeah, that's the preview for tomorrow's show. So it's 8:58 now. We're going to take our final break of the day, and we're going to grab our last guest. That is Eric Leibovich. He's the head of product at AlphaSense, and what they're doing is actually pretty cool. They have a platform that basically uses very complicated things I don't understand, linguistics and AI. I think the term is linguistic search algorithms to help people understand the markets and do some research. So we'll be right back with Eric Leibovich. He's the head of product at AlphaSense. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elkan, and we're on the line with Eric Leibovich. He is the product manager at AlphaSense. Eric, thanks for joining us this morning. Tell us a little bit about AlphaSense and what you guys do.
So AlphaSense was founded in 2008. Our co-founder, Jack Coco, saw a need for innovative solutions for investment professionals, namely analysts, portfolio managers who are expecting to review vast amounts of content to find information buried within company documents. So that process of opening documents one at a time, using Control F to search, was neither sufficient nor efficient, missing a lot of the results needed to make better investment decisions. AlphaSense allows users to search across all of that content at the same time, and they can see all those results on one screen.
So how does it do that?
So, the technology includes machine learning and advanced linguistic search and natural language processing algorithms that deliver relevant results to our users through a web-based search engine.
Yeah, I believe the term that was used, and I have it right here, I wrote it down on our first phone call, proprietary linguistic search algorithms, which sounds very big and very scary, but actually not. So I got a quick look at the platform by going on your site. So can you talk about the technology behind the platform? How does it actually work? Because I thought that was really cool.
Okay, cool. So a lot of our secret sauce, if you will, is found in how we index information. What's readily apparent to our users are easy-to-use search features, such as Boolean and proximity search settings, and something called stemming, which automatically expands keywords to include variations such as reports, reporting, reported, all similarities to a term like report. Our users also get an added advantage with our kind of smart synonyms, as we call them, which is machine learning technology that automatically expands keyword searches to include other industry or business terms. Our proprietary tools cast a wider net and remove false positives from results. So let me put that into an example. For instance,
I was going to say,
search for.
I was going to say, can you give us an example?
So, an example here, a search for revenue, common term in finance speak, would include results mentioning sales, but not sales vice president. A lot of false positives could have terms like sales or revenue. It's through search query improvements such as these that allow AlphaSense to deliver only relevant results, saving users time and helping them to find what others miss. Additionally, our unique 3-column layout of our search results shows a list of document results on the left side, where a middle panel shows you the actual text snippets containing those keywords in question, and allowing you to then click on any of those sentences to then jump to those keywords in context in the document, which would appear on the right side of the screen. So you can see all of this on our website, alpha-sense.com.
So this is the core of the product, but are there any new things that you guys are working on right now that you can talk about, or what? I guess what's next what's the next stage of the company?
So there's been a lot done about improving search, and we're constantly doing things that also go towards improving the experience of consuming the document. So we've done things around highlighting and annotating documents, allowing you to add your own custom tags to the document so you could find it more easily, allowing you to share that document with colleagues, whether it's your own document or something you found in the system. And things along that sort. So it's not just a search and retrieval tool, but expands more into the workflow.
And then who's AlphaSense for? Right now at least, who's the ideal customer, and who could be the ideal customer maybe down the road?
So I mean, it's ideally suited for research analysts, whether hedge funds, pensions, mutual funds, sell side, buy side, it quite frankly doesn't matter, but certainly extends well past that definition to be high net worth professionals or the wealth managers that might work with them. Investment bankers certainly find it particularly helpful. And then, kind of outside of the realm of finance, it certainly extends to really any knowledge professional, whether they're in a consulting business, legal, or otherwise. It has a lot of applications, even including into the corporate suite. So there's a lot of knowledge professionals who conduct research who spend a lot of time doing so.
I want to ask you about machine learning, kind of as a whole. This is a newer area, a newer technology, and AlphaSense is one of the better examples that I've seen of somebody being able to use machine learning right now, because you hear a lot about companies developing that technology, or it's going to happen, and you guys are doing it. What's the role that you envision machine learning and linguistic search algorithms, with both things that you use, playing in kind of the future of the finance industry going forward?
So I mean, it's quite simply, it's saving time. So it's improvements in search, which are available today and are saving time, and products such as AlphaSense, and I think that will continue to grow, allowing users to instead spend that time on analysis instead of searching, and thus helping them generate alpha or finding what matters and achieving that outcome quicker.
And then at what point do you see the technology that's behind AlphaSense trickling down to the retail traders, to everybody on Wall Street?
So AlphaSense offers a vast content set. Can go into what that really is, but that coupled with intelligent search is a platform that makes research easily digestible. So from our unique display to accessing top news and journals and research, being able to upload your own content and share with your team. So AlphaSense provides a time-saving solution for anyone. So who needs to conduct research, So in truth, I'd encourage anyone who's interested to contact us for more information. In fact, we'd like to offer a 2-week trial to anyone listening today. Just go to alpha-sense.com and click on the free trial button at the top.
Awesome. That's all. I'm going to take you up on that offer. And Joel, you got a question? Pop up in here.
I sure do. I'm just looking at the site here, and you got questions scrolling in there. And this one is, what are the key business metrics from the last 6 months? I was just like, how did you guys come up with these questions? And basically, you can put anything in there, and it will grab it for you.
So it's really about trying to do a complex search rather easily.
Okay.
So taking a few concepts that you might be thinking of at the top of your head, and whether it's say CapEx, so for capital expenditures, and we know that shorthand is CapEx. Maybe you're wondering, is it growing? And, add the query of grow, and maybe you're curious about a certain region. So in our product, you can literally type in the 3 words of CapEx, growth, and China. Those 3 words. Nothing else. No need to become a librarian and be able to get to that answer really quickly. So imagine doing that for, say, Caterpillar, and you're wondering what's going on in that space or in that general area. You can find those text snippets that are speaking to that exact topic in seconds. So if you're ever curious if anyone on your watch list is talking about something rather complex where searching with Control F you would fail or waste considerable amount of time, with AlphaSense you're able to achieve that really in seconds.
All right, we've been on the line with Eric Leibovich. He's a product manager at AlphaSense. If you want to meet Eric, or I hope you'll be there, or anyone at AlphaSense and learn more about it, they'll be at the Benzinga FinTech Awards in May. They've applied, I believe, for the Finding Alpha category. So I hope to meet you there and see you there. And if you want to learn more, you can, as Eric mentioned, go to alpha-sense.com and free 2-week trial. You heard it here. Eric Leibovich, thank you so much for joining us today, and looking forward to seeing you at the Benzinga FinTech Awards in May.
Thank you for having us on the show, and definitely looking forward to this year's results.
All right. That was
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the
future of our industry. It's the future of this business. So we're trying to expose our listeners to more of this emerging type of tech, because this is what people will be using in the future. Hope you enjoyed today's show. Hope you enjoyed our chat with Frank Holmes, Rachel Shasha, and Eric Leibovich. If you want to listen to the whole thing again, you can do that right now on YouTube Live, or you can wait for the podcast to be posted on iTunes, SoundCloud, and Stitcher. So that's our show for the day. Please remember that all the information, material, and content is for informational purposes only and not meant to be investing advice. Have a good rest of your Wednesday, everybody. We'll be back with you folks tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.